Hi everyone, welcome to 23 Mile with me, Kayode Odele. Today we're joined by Ziyaad Ahmad, a serial entrepreneur and co-founder of Qanuni, an AI platform for lawyers. Together with his sister Anushca, Ziyaad is one of the pioneers of buy now, pay later in the Middle East, having founded Spotii back in 2020. The founder sold Spotii to a large Australian startup after just 18 months. Under 2 years later, they turned a setback into a fantastic opportunity when they initiated management buyout and once again owned Spotii. Remarkably, the siblings existed for a second time with a sale to embedded finance startup NameCard just 3 months after this. Before his entrepreneurial journey, Ziyaad was a long-shot equity analyst focused on retail and consumer tech, where he built a strong investment track record rooted in big data in several blue-chip firms on Wall Street. He later crossed over from Wall Street to Silicon Valley when he joined Australian startup Afterpay. On the show today, we will dive into his non-linear career path, his entrepreneurial journey with his multiple startups, and his insight from the front seat of mergers and acquisitions. Ziyaad, welcome to the show.
Thank you so much. It's lovely to be here.
You were telling me how it's been all hands on deck in the past few months, and I haven't seen you, seen you at the Opus event.
Absolutely. So we are at that wonderful stage at an early stage startup where you are trying to build the business. That basically means build a product, build a strategy, build operations, hire, scale, right? So it's just an all-consuming job. So it's hard to be able to get work-life balance, at least at this stage of the company. People will often ask me, how's this different from Spotii? The only difference is that I'm a little better prepared. Like first time around, I wasn't as prepared as to how all-consuming it could be. This time, I'm a little better prepared for that. So I'm like, all right, this is as I expected. Right?
That is very scary. You're a veteran in the field and it's still difficult, but it is honestly what I like to talk about on the show. Just to let people really know what it takes to build a startup. It's not about the rosy exits and the IPOs, it's actually the craft. But let's start. You running Qanuni today with two co-founders, one of which is your sister.
What I always tell people that if you do decide that you want to take on a co-founder, right? You have to fully understand that this is a person that you're getting into a very intimate relationship with. Like it is very much like a marriage. When two people are trying to build a business together, they're involved in a very deep manner. And it requires a great deal of trust. It requires a great deal of knowing each other's capabilities in order to be able to work well together. Right. So yes, I founded the first business as well as my second business with my sister. And it's wonderful to be able to have somebody who basically I know that if I'm not in the room or she knows that she's not in the room, we always have each other's backs because we actually know each other well enough. It was a journey to get here. It's a very difficult transition to go from siblings to business partners, but I wouldn't have it any other way.
Did this come from your background, from your parents? Tell us about growing up and where that entrepreneurial bug came from.
Yeah, we grew up in Pakistan. That's where we completed our high school. Both of us went to college in the States and both of us went to the same school. She was 2 years ahead of me. Both of us went to Wharton at the University of Pennsylvania. So we sort of had that same high school, same college training and education. Then our early career paths actually looked very similar as well. She went into investment banking right out of college. I went into investment banking right out of college. She then moved to private equity. After that, I moved into private equity after that. And then our careers diverged. So we have that sort of the same core foundation of training, which I think is very helpful because it allows us to speak the same language and sort of understand each other's perspective. I do come from a family of entrepreneurs, though. My grandfather was an entrepreneur. He started his own business. He passed that on to my mother, and my father continued that business through in Pakistan. So we do come from a family of entrepreneurs who've built successful businesses.
Were you and Anisha involved in the family business as kids?
No, we were not. We took a different path. Both of us decided to stay on in the States instead of going back to Pakistan after graduating college. She She ended up moving to Dubai, and then it was 16 years later, I followed her.
So, but going on, you finished from Wharton and went straight onto Wall Street. How did that come about? Was there a love of finance somewhere along the way, or how did the finance roles come about?
I've always been good and find math fun, logic fun. It's just, for me, numbers make a lot of sense. So from that perspective, the inclination that I had that just it attracted me to that subject area. But also, when you attend Wharton, is very much school that puts finance up on a pedestal and sort of drives you towards finance. It's an excellent feeder program into Wall Street.
And what was that like? I mean, Wall Street is famous for the very long hours.
By the way, I think is very fundamental to the success that Anushca and I have had and the way that we sort of work together and understand each other. It is very true. Investment banking is kind of what you hear about it, right? You are working 20 hours a day, 6 days a week, and a half day on Sunday, right? That's a regular working hour for regular working week for an analyst when you are at an investment bank. It was not uncommon for me to be sleeping in the office. It was not uncommon for me to be showering in the gym across the street instead of going home. But when you're that early on and you sort of get in your career and you're sort of imbibed with that kind of work ethic, it really does help you as you continue. People often ask me, what does it take to be an entrepreneur? And I would say that the number one thing, it's not the intelligence, it's not it's not even necessarily the technical capability. I would say it's grit and resilience. That's the number one thing that it would take for you to be an entrepreneur, because
So you got the whole love for data and maths with a degree, and then the work ethic on Wall Street. What then triggered the move across from Wall Street to tech?
I was a long short equity analyst at a hedge fund, a large global hedge fund called Citadel. And Citadel's it's a pioneer in the finance industry. It's very cutting edge as far as investments goes. And when I was an analyst back then, it was that was when big data just had started to emerge. So Citadel would often pair the financial analysts with data scientists for them to be able to execute the strategy. Right. While I was doing that, I was like, well, wouldn't it be more powerful if the financial analyst and the data scientist was all in one? So that actually compelled me to go back to school, and I went to the University of Berkeley and I got my data science degree and I learned how to code. And that was also what allowed me then, I was like, this has a lot more applications in the world of tech. And that compelled me to move over to Silicon Valley instead.
What was that like? Did Silicon Valley meet your expectations when you joined? Was it Afropay?
Yeah, it was my first non-finance on Wall Street job, early stage startup, right? And that's kind of where you learn what it took to be able to build a business from the ground up, right? Buy now, pay later back then, even in the US, was really new. It's just a bunch of people from various backgrounds trying to work together to be able to to be able to bring this new product to market. So it was a wonderful opportunity. I was as part of the senior leadership team. It was a wonderful opportunity to be able to sort of see that from how that was sort of built from the ground up.
There's a theme here now. You move. There's a lot of change. There's a lot of innovation. But from being part of the leadership team, you then made a move across the world to Dubai to start Spotii. Which of them
Yeah.
came first? Was it Spotii the idea or the move to Dubai?
So Spuddy, the idea came first. Anushca was visiting me in San Francisco. We were having a discussion as to what I was up to. And it was kind of her light bulb moment where she was like, look, this seems like it has very strong applications in the Middle East. The thesis being that it would be, because of the fact that it is interest free, it would be Sharia compliant. Hence, it would be very culturally accepted, where traditional credit would not necessarily be accepted. Online sales was still very nascent in the Middle East, and cash was still king. So you can kind of see that we was looking at it from an investor perspective as well. And we were like, look, the macro and the TAM actually makes a lot of sense. And at that time, nobody was doing it out here. So we started building the business, and I made the move over to the Middle East.
Digging a bit into the kind of thought process of early stage startups again, what kind of validation did you go through beyond the initial idea, beyond your experience in the field? How far did you get into before you said, okay, right, I'm leaving my job, it's time to go focus on this?
For any business, right? Like anytime you're doing something, I think that it is important for you to be able to get that validation, that product market fit and understanding of it. Like that's my personal belief because I am a data scientist and I do rely on the data. So so I will always defer to the data as opposed to true gut instinct. I made the trip over here a couple of times, and we would go and speak with large retailers that are connected and said, look, like, what do you think about this idea? Is it something that would be interesting for your consumers?
So you got all that initial good feedback from the retailers. At this stage, were you also speaking to investors to see if they will back the idea, or were you all just focused on the customer side?
Good execution needs very fast speed, right? Like it's not sequential, it's always simultaneous. When you're going out to the market, you're validating with consumers, you're simultaneously also going out to the investors, validating the thesis with the investors. This is kind of where the resilience and the grit comes in. We were hearing something very different from the market than what we were hearing from the investors. At that
Very
time,
interesting.
the MENA ecosystem, it was a lot more nascent than it is right now. We kept getting feedback from investors that said, why can't banks do this? Or credit is never going to work here, it's never going to take off. Dubai is a highly transitory city, so your defaults you're never going to be able to manage your defaults. The downside of doing the simultaneous is when you start getting mixed signals from the various channels. That's where you bring in your instincts.
In those very early days, building something totally new. I mean, because buy now, pay later today is one of the most creative segments globally and in the Middle East. But you were early, and there's a problem to being innovative and early. So
Yeah.
in the early days, did you fund this from both of your savings, or were there some very early backers?
Oh yeah, no, we bootstrapped it. Look, if you have the ability to be able to bootstrap early on, I would strongly recommend it. It is very expensive to go to backers very, very early on. Personally, for me also, unless I validated an idea and I've sort of put my personal wealth at risk, I would never be comfortable with going out to others to ask for backing of an idea. Yes, we very much bootstrap Spotii. It's the same process that we took with Kanuni. We bootstrapped our initial build as well as that validation process.
Still on that same theme of fundraising, Kanuni closed a $2 million pre-seed round very recently. Congratulations. Spotify also closed a funding round, I think, within a year. What
Mhm.
were those things you will say you've done right with these two startups to be able to achieve this milestone very quickly?
Sure. It's not necessarily complicated. I have a fundamental belief good process will probabilistically lead to good outcomes. So, the things that we were all talking about that led up to this discussion, doing your research in order to be able to validate the market, being able to understand what the pushback is going to be, being able to know how to address that pushback. It's the same process that you would take if you were an investor,
Yeah.
right?
Okay.
Right? I guess that this is where Anushka's and my finance background comes in very handy. We know what investors would be looking for. So it's our job to be able to um, l- ensure that they're able to get that upside while be able to do things to mitigate the downside. Right. So you can actually tell the story at an investment level. It makes for an easier process with fundraising.
If we could go a bit into the details, a couple of things that investors look out for. They look for co-founding teams, they look for domain experience, they look for software plus, industry experience, and now to the early sales, early traction. How would you rank the top three factors for any founder who needs to raise funding?
Yeah, absolutely. So early stage is really just about the team, right? That is first and foremost, right? Like because let's be real, early stage people are just backing you a lot. You may have early traction, whatever it is, but it's still going to be relatively small compared to the size of the bet that they're making. Early stage is about the team and that background, right? Being able to sort of tell your story and why you are the right person for the job to be able to solve this specific problem. I think that's incredibly important. right? I can tell you that for most of the meetings that I go into with investors, yes, we have the decks and everything like that, but the amount of time that we spend on backgrounds is disproportionately much larger than everything else, right? At the early stage. Number two would be market size, right? Because it's really those two combinations that it's, do you have a problem? Are you the right person to fix it? And is it a large enough problem that it's worth fixing? Is a problem that you've picked large enough or potentially could be large enough for people to want to care about? And that, by the way, doesn't necessarily need to be an existing construct, right? Like often industries are born out of being able to figure out a problem in a better manner, right? Like you take Uber, right? Like you could ride taxis before Uber. Like it was a different industry that they ended up creating. So I would say that market size is sort of the second one. And I would say third thereafter would be traction.
Okay.
I actually don't think, as an early stage founder, as people 100% want to see some kind of traction, but if you have boxes 1 and 2 checked off, third is kind of the product of those two, right?
Okay.
And
Yeah.
people will
Okay.
give you the benefit of the doubt. It becomes a lot more important if you're not able to convince the investors of 1 and 2 out the gate, right? And that was a problem that we had with Spotii, by the way. We could not invest. We were first time founders. We could not convince investors, like I just moved to Dubai. We could not convince investors that we were the right people for the job. We could not convince investors that it was a large enough market. So we had to bootstrap and show the traction in order to be able to get that.
So, which brings me to the next question, which is with Quanoni, that means, was it easier convincing investors? Now you've been here 5 years, you have had exit, everyone knows you. Was it significantly easier ticking that team box for the second startup than the first one?
Look, it 100% helps, right? Like it's true. And it helps because of the fact that I made a lot of mistakes at Spotii that I was able to avoid at Kanuni. The experience matters, right? Like I know how to do certain things a lot more efficiently. It significantly increases the odds of your success. Being a second time founder or third time founder, it 100% helps with that.
Back to Spotii, after the first fundraise, within a short period, you raised, I think, the second funding round from Zipco. What was this process like? In that
Yeah.
this was a strategic rather than a
Yeah,
VC.
it is like everything else with startups, right? Like you can work as hard as you want, you can have as much grit as you want, but you kind of need a little bit of luck, right? I
Yeah.
challenge anyone that says that they weren't lucky when they sort of had, it's kind of luck when they had success. Yes, obviously hard work increases the probability that you'll have good luck, but you definitely need serendipity as well, with all the multiple factors that are involved in operating a business or creating a business. With Zip, it was a very interesting. It was a very interesting journey, mind you. So we launched Spotii in April 2020, right? We'd gone into lockdown in March of 2020. So I was sort of, so we were sort of, so the financial markets, all the investors that we were also talking to had all shut down. Just by the way, even the ones that we progressed, if you remember back then, the world has kind of fallen apart, right? um, it was interesting because I was sitting in lockdown, and like, what the heck did I just do? I just moved from San Francisco, left my great job to come to Dubai. I don't know anyone to start a business. What the heck are you thinking? The world's coming to an end anyway. What ended up giving us that sort of continued courage to move forward, because Anushca and I were discussing, with everything that's going on, is this even a smart idea? Starting a business in 1 month into the pandemic, where no one knows what's going to happen. Like, yes, it is, because what we saw very early on was that shift from offline sales to online sales. It's very obvious with 2020, but
Yeah.
I'd set up trackers where we were able to sort of see what that traffic looked like going to retail sites that we had targeted, right? And we saw this significant uplift. And I was like, look, this is a part of the thesis, right? This is actually going to help us. Let's take the plunge, right? Let's take the risk. Actually, this preamble was important because it was actually very core to how we operated Spotii. Big data, AI, it's always been part of whatever business we've done, even before it was cool to do. That was very helpful for when Zip came into the market. So Zip had initially already made a decision to enter into the Middle East. It was like, would they do it through a strategic partnership? Would they start it up themselves? We were already operating there, so they started talking to us. And when they understood our approach we took toward building the business, it lined up very closely to theirs. A core part of it being use data to be able to grow your business. And that's kind of how it was actually a fairly easy conversation. They took an initial investment. They took the initial investment, and we then started to get a lot of success at Spotii. We signed up with Shein, which is, as you know, a global powerhouse, probably online retailer in the Middle East outside of Noon and Amazon. We signed up with Shein. We signed up with Amazon. We started getting a lot of this very early success. And that compelled them to make us an offer to buy out the whole business. The thesis being we want to build a global buy now, pay later platform.
Okay.
So if you are a person living in the Middle East and you travel to Australia, you're on the Zip platform and you can BNPL across borders, right? And being part of the global executive team to be able to sort of build out this global platform was the initial vision, right? Made a lot of sense to us. And so that between the fact that we had very strong momentum, we saw where the vision was going, thought that it was a great decision for us to partner a lot closer together.
Amazing. I mean, then with that initial, you mentioned the luck, you mentioned the early successes you had. Maybe getting a bit into some of those early successes. 1 million signups, 1,500 merchants in a competitive space.
Mhm.
And how did you approach building the business in those early days that facilitated these early successes?
Did allude to it during during my conversation about how Zip and Spotii came together. But you have to be incredibly efficient when you are an early stage startup or when you are early stages. And I believe that there's a lot of efficiency that can be brought about by automation as well as big data. So for us, whether it was at Spotii, whether it's at Kanuni, we're actually where we are an AI native company. But even at sort of at Spotii, everything was very much driven by big data and operational metrics. What I mean by that is whether you're talking about how much you're spending on marketing, whether you're talking about tracking early user metrics very closely, whether you're talking, whether the efficiency of your engineering team, all of that was very much plugged into our central sort of this centralized operation systems that we built ourselves, which gave us really strong insights into the business. So when you have very strong insights into how your business is operating, it allows you to pivot very quickly. I think that that's incredibly important, right? You need to know if you're going wrong and pivot really quickly. And I think that's sort of a tangible. That's something that's tangibly led to our success at Spotii and led to our early success at Kanuni as well.
Talking about the growth, we talked about that acquisition, but between those two things, a lot of competition came up in the space.
Yep.
How did that come about? Was it investors seeing this was a space that was going to become really hot and valuable? What was the origin of the competition in the space?
Okay, each one of the people, there were four major players that came up around the same time. It was Spotii, Tabby, Postway. Each one of the players had their sort of own journey as to how they got there. I do happen to know all of them, and then each one of them had their own journey of how they got there. I think for all of them, actually, it was very much the same macro thesis that Anushca and I saw. I do also think that because of the fact that there were four of us in the space, it accelerated the entire growth of the industry because you would hear that a competitor is doing something or about to do something, so you kind of had to do it first, right? And that kind of pushed us towards so you had four players who were validating a thesis, right? It was very early stages, so you had four players that were validating a thesis that brought in the investment, right?
One of my previous guests on the show said that one of the biggest things he looks for if a startup is going to succeed is, are they playing in a competitive space? More competition is good, which kind of seems to be what you're saying as well.
I agree. I think competition keeps you on your toes. It forces you to be a lot more efficient. It forces you to be faster, right? It forces the fire underneath you, honestly. And you need that. I don't care who you are, right? Like I personally, I am a very competitive person. I like the fact that I'm going head to head with somebody who's super smart, right? Or somebody or people that are super capable. It does light that fire underneath you, and I think that that's necessary. I think it makes for better companies and better products and better outcomes in general.
So was it part of the thought process in kind of joining forces with Zipco, being part of a bigger player, being able to finance the expansion?
Yeah, so 100%, one of the obvious advantages that we got as being part of the Zip ecosystem is the arbitrage to financing rates, right? Being part of a larger company, being part of an international company, you were able to get lending rates a lot lower. And obviously, buy now, pay later is all about a big part of about your operational costs, and buy now, pay later is your borrowing costs. So it was obviously a very large advantage being part of that Zip ecosystem.
You touched on it previously, but I'd just like to dive into that a bit more in
Mhm.
terms of the full sale to Zip. They came in and took a stake and then eventually bought you fully. Walk us through how that full acquisition then came to occur.
I forget the numbers specifically, but they took a stake in the business. We were talking at that time to both financials as well as strategics. Zip was a strategic. We were talking to VCs and other financials as well in order to be able to close this round out. There was a lot of value that you came with going with the strategic, just understanding the value that they could bring in from operational expertise and leveraging their global network, etc. Customers, merchant acquisition, like that was a very big part of it. Like I mentioned to you, we had very strong momentum. And right after they took the stake in the business, we acquired some very large merchants like Shein, like Amazon, right? That compelled them to want to come approach us and say, look, we want to buy you out because we think it makes a lot more sense being part of this global network, right? When Anushca and I were internally discussing what we wanted to do, we had this vision, we had this very strong belief that the Middle East was going to be a very large market for buy now, pay later, and we wanted to execute upon that. And we said, look, being part of the larger player allows you to be able to execute on that vision a lot faster. So it very much aligned with how we were envisioning the business would look like, partnering up with them.
Amazing. And how did it pan out? So they acquired a company. Was the exit life-changing money for you and Anisha?
Yeah, it's great to not have to worry about not working again. Like it's a privilege to not having to worry about working again. It was life changing for me. I'm not going to speak for Anusha, but it was life changing for me.
This also means all your previous investors made money on
Yeah, yeah,
backing you.
yeah. They managed to get an excellent return. I think it was a fix for them over 18 months. So they did pretty remarkably well.
Moving on to Zipco, if I recall correctly, you then went on to work there, like you said, leading that global expansion. Did that, being part of the larger global team, how did that pan out? Did it meet the expectations and the vision you had when you exited to them?
Yeah, so you know what was great about Zip? I actually had a wonderful time working at Zip and with them. What was great about it was very much they did give you a lot of autonomy in your regions, right? So for us, not much changed on a day-to-day basis. There were some things that started to change where we started up integration work in order to be able to build up a more global platform and more global tech. But when you are actually looking at the day-to-day, not much changed.
And within a few years, there was a bit of a pivot and then a reacquisition. Which of this came first?
So unfortunately, Zip is a publicly traded company, and unfortunately, they were not immune to what happened when the Fed ended up raising their rates. Right, in companies, it took a significant hit, and it completely changed Zip's financial position. They made a strategic decision that they wanted to focus on their core markets, which are Australia and the US, and the rest of their markets, their growth markets, was something that they don't necessarily want to continue to operate. This is all public information. I'm not saying anything that you can just find simply by going back and going through their investor decks, right? So it is incredibly disheartening. Remember what I told you about grit. It is incredibly disheartening to then be told right after you sell your business and you're sort of growing your business and it's doing well, and Spotii was doing really well in the Middle East, that hey, by the way, we've made a strategic decision. Unfortunately, we can no longer continue operations out in the Middle East, right? It is very devastating. It's
Yeah.
it's your startup, it's your baby. You put your blood, sweat, and tears into it. But it's also understandable from their perspective, right? Like focusing on the core is what their investors wanted them to do. Focusing on the core actually made them a much stronger business operationally. They're doing fabulously right now. So it made sense from their perspective. So when they did come and approach us about it, the way that we had already built our tech architecture, it was a very flexible architecture, and it could go multi-tenant. So when Anusha and I were talking about this and we were like, all right, what do we do? That's when I was like, okay, look, so in order for us to continue down the buy now, pay later journey, you would need to continue to have large amounts of capital to grow the business, right? Like that's a dynamic with buy now, pay later. The more capital you have, the more you can grow the business. We've already built this tech, right? Why don't we pivot towards an asset light model and go white label with our tech? Because digital lending had just taken off, very much believed in we continue to believe in that core thesis about the Middle East, right? That digital lending is just going to become a larger part of consumers' lives here, right? But they weren't people that knew necessarily how to build and execute on that really well. We did because of Spotii, right? So we went to Zip. We negotiated to take back our technology, take back the Spotii name, reacquired that in exchange for helping them exit out of the Middle East. Right? And we pivoted. We became a white label technology solution provider.
Amazing. How is that going today? I know you are full-time in Kwanoni now, but is the Spotii B2B engine, is that still running now?
It wasn't long that we were independent because it was 3 months after we reacquired our tech. Um, we were fortunate enough to connect with Nimcard, which was another fintech banking as a service platform out in Dubai. We were partnering up with them for one of our card offerings, but had a chance to meet Omar. He's a lovely person who's their CEO, and he proposed, hey, why not do this underneath the Nimcard umbrella? Because they were building a full suite of banking services. They just did not have the lending component. We had the lending component. So we weren't independent for that long. It was like 3 months. And then we got reacquired by Nimcard and stayed with Nimcard for about a year to help grow that business. And it did remarkably well. Our thesis played out. The Spotii technology now powers lending solutions for banks in Saudi Arabia. I believe it has a monopoly for all the buy now, pay later in Qatar.
Amazing.
Like the other fintechs didn't build it, they're just using our tech. In Dubai, it's proliferated amongst both banks as well as fintechs. So yeah, it did wonderfully. It continues to do wonderfully well. And I'm very proud of that.
You got into a space very early, at least in the region. Like you said, it's paid off fantastically well. You've been able to sell the business not once, but twice.
Yeah.
But now you are kind of relatively early into another space with Canoni. We've touched on it several times. But tell me, in a nutshell, what is Canoni?
So first and foremost, by the way, I am a data scientist. Like that's my passion.
Okay.
So was very early on in the AI wave. We were using GPT at Spotii when it came out, like in the Spotii credit risk tech stack, very early on. So I saw the potential for the technology really early on. I'm a very strong believer that AI is the next tectonic shift in technology.
Okay.
I've seen three in my life. I've seen the rise of the internet, um, the rise of the mobile phone, right, and basically now AI, right?
Yeah.
AI is going to have a tech. It's gonna fundamentally change industries going forward. And I saw its power. Like I said, I saw its power really early on when we started using it in the Spotii risk engine, right? It becomes really obvious when you're working with the tech directly. And for me, I wanted to be part of that. So I was very convinced that my next company was going to be AI native. How we ended up in the legal space is because Anusha and I have worked really well together as founders and entrepreneurs, and still very close as brother and sister. It's a really fun challenge to be able to keep those two separate. Um, the uh, the what we bring. So Anusha sort of brings the operational expertise. I bring the tech expertise. What we lacked before entering into the legal space with the domain expertise, right? We just need to just figure out what we wanted to do because both of us were very strong believers in the technology. It was our former lawyer who came up to us and said, look, why don't we build legal tech together? I can bring the domain expertise. And that's how the three of us came together.
How's it going
Yeah,
so
just
far?
yeah, it's we officially launched in January of this year. I did our pre-seed in June of this year. Yeah, so just yeah, that's approximately the timeline.
And this is enterprises, right? Like you're going working with the big law firms.
Or yeah, it's law firms, legal professionals. So it doesn't matter if you're the individual practitioner, your mid-sized law firm, you can use our technology. It goes all the way up to large magic circle type law firms. The beauty about how we built the technology, we took our learnings from how we approach the consumer industry. You need to make something very simple, right?
Okay.
Like our entire thesis to legal tech is it should be as simple as downloading an app on your phone. So for that reason, our technology is an app on Microsoft Marketplace. It's embedded within the 365 environment. That's where
Okay.
lawyers work anyway. Because again, our learnings from dealing with consumers, it's very hard to change consumer behavior. If you're
Yeah.
able to embed yourself in that flow, right, it's a lot easier for them to be able to be engaged with you. So that's the approach we've taken with Kanuni.
And there's a point you've alluded to during our conversation, which is with Spotii signing on Amazon and Shane and all the large retailers. What's your number one tip for enterprise sales?
Well, this is a it is a process. It is like everything else, right? Like you follow the good process, you will get a good outcome. My number one secret for enterprise sales is that I will always control the sales process. I never let it get out of my control. So there's lots of things that you can do throughout the sales process tangibly in order to ensure that you can keep driving that process forward. Because as soon as you sort of the favorite one liner for an enterprise is let us discuss internally and we'll get back to you. I'm sure everyone's heard that, right? That's a kiss of death for me. So that's when you sort of start losing control of the process, right? So you need to be able to recognize those signposts and you need to be able to have mitigating strategies when those signposts do present themselves to you in order to ensure that you continue to drive the process forward. So for example, let's just say you and I on a call and somebody tells me we'll discuss internally and get back to you. I say, oh, actually, that would be lovely. Hey, why don't we do another check-in at the same time next
Hmm.
week, just to be able
Okay.
to discuss how your internal discussions have gone, right? In the meantime, I'm also going to share with you what our onboarding process is going to look like. That'll allow you to for me to be able to answer any questions that you may have about that onboarding process in the interim. The thing about B2B sales or large enterprise sales is that you have to recognize that you find a champion and you build consensus within the firm, right? You need to help them build consensus within the firm. But for that reason, you also need to be able to make sure that process continues and you're sort of keeping your champion aligned towards that goal and that vision. So I would say that would be my one secret.
I can see there's so much experience and insights there that we could spend the rest of the afternoon digging into
Yeah.
that. But I have just a few more questions. And maybe one on the whole generative AI thing. You've
Yeah.
given your view, you've taken your future, the next your next step journey on this. What would you say to the people who see it more or as a hype rather than a real transformational step?
That's such a hard that's such a hard question because they like any like any early tech, there are things that are very hyped up and they are realities.
Ah, okay.
It's a very challenging question to answer for you. For example, I will meet people who basically think that AI is magic, and when they meet the limitations of AI, are very disappointed. So vacillate toward hype to this doesn't work. Do you know what I mean?
Yeah.
So the fact is that this is early tech. The fact is that it is already transforming industries, but there is the it might be that what the average person sees as the capabilities of the tech may not be where the tech's at right now, but I fully believe that it will ultimately get there. Right. So that's why it's a challenging question to ask. They're not necessarily wrong when they're saying there's hype. They're wrong when they say AI is hype, but they're not necessarily wrong when they're saying there is hype, like there are bubbles of hypeness in the tech compared to what the reality of it today. But that you can have the hype and it doesn't preclude it from being from being the transformational technology that I believe it's going to be.
You said that was a challenging one to answer, but honestly, you gave a very great answer. One more question. We've gone through all these fantastic things you've achieved with Spotii, with Quanoni, before them Wall Street. Have there been periods where any of these startups have had a near-death experience or you've had significant challenges?
Yeah, I mean, that's just a Tuesday. We just talked through the highlights, but at the start of this, when we were talking about what's the number one thing that is important for an entrepreneur, it's grit and it's resilience. Why do you need the grit and resilience if all you're doing is like going from like one magical exit to another, right? To be able to get from point A to point B, there are lots of lows. I mean, we pivoted because we had a near-death experience with Zip, right? Like that was a near-death experience. We were told that Zip is going to be shutting us down, and we said no. We wanted to pivot, and we had to take another risk, which was like, okay, are we really doing this all over again? And you're kind of like, okay, I have to rebuild this whole thing from the ground up from a different perspective, and do I want to do it, or is it worth it? And so, like, it's part and parcel of this. I hear you often saying this, and I see posts from you often about it. You talk about the realities of what it's like to be an entrepreneur. Right? You will see the headlines and the wonderful successes and all of that stuff, but nobody wants to talk about big, and nobody will necessarily be highlighting what it took to get there.
Yes.
The lows are really low. That's just a reality.
Thank you. But two final questions. One is, what keeps you going? Here we are on a Saturday. It's maybe the second or the third startup, depending on how you count. What keeps you going?
Honestly, I love them. Like I know this is a really cliche answer, and I wanted I've tried to think about an alternative, like what like an like I've done a lot of soul searching to try to figure out an alternative answer to be able to give you. But the reality is, I love building. I love doing it. For me, I think like those day-to-day challenges when like you're able to crack that problem and continue to move the business forward, I think that's wonderfully rewarding. I think consider myself the type of person that's constantly wanting to evolve and constantly want to learn. I don't believe that you can do that unless you're sort of very much you know, in the mix and in it, right? So for me, it's what my passion is. The ability, the need to want to build, the need to want to be in industries that are innovative and changing, learn the ins and outs, learn their core. That's what drives me.
Thank you. Well, shout out to Opus. I met you in this wonderful community.
Yes. Yeah.
You and Anushca have been in the industry for so long. You're very experienced entrepreneurs. What makes you still want to be part of like a community of founders like Opus?
I've met wonderful people through Opus. I've made several very close friends through Opus. And I look, the draw of Opus was that ultimately you want to be able to be with people that understand what you've been through or what you're going through, right? People are connected with things that they love, but also like are very deeply connected with things that they hate, right? And being an entrepreneur, you will get things that you love and you really hate, right? um, Connecting with people that have had those common experiences, being part of a community like that, it's a privilege more than anything else. So it was a no-brainer when Sam asked me to join.
Amazing. I've been part of the community for just over a year. I found it fantastic. On that note, it's been absolutely fantastic speaking with you. Thank you for joining me and all the best.
Thanks so much. Appreciate it.